This is the Analysis in Chains with Nathan Williams and Neil Kieran.
Welcome to Analysis in Chains. Neil, how's your week been going?
It's going good, Nathan. It's going good. I nearly had a heart attack when Bitcoin jumped up out of the blue.
I keep on saying we called it, man. We called it. Except I'm not sure if it counts if we called it, if it's because Tether has been like floundering. But
Yeah, exactly.
I'll take the credit anyway.
Yeah, I think we kind of posted our episode about how we're positive, and at the exact same time, Bitcoin jumped. And I was like, yep, that's us. That's totally us.
Totally all us.
Yeah.
Come behold the gurus.
So
we're not financial experts, don't trust us.
Yeah, exactly. This was pure luck. But no, it's been a good week. Things have been calm since, I think more because no one expected that jump. And so the week has been calm, which is interesting in crypto because the stock markets have not. And so I think it means a lot more people are looking at crypto just to see, okay, how does this react? And everyone's saying it's supposed to be alternative, and people trying to sometimes put relationships between the stock markets and Bitcoin. So it's interesting to see that actually Bitcoin's calm. And this is a great thing because ideally it acts differently to other asset classes out there. And I'm still very hopeful that things will improve, going forward, especially all of the great news we hear about institutional investors looking to get involved in different means.
Speaking of institutional investors, you've heard that Mike Novogratz has become the first alpha crypto custody client of Fidelity, right?
Yeah, so if people don't know who Mike Novogratz is, he was like a big trader back in the day on Wall Street. And, just to keep a long story short, he has recently set up Galaxy Digital that is involved in crypto in many different ways, like be it through venture capital, helps setting up ICOs, has a trading center, so it works in arbitrage. And he's been heavily involved, I would say, in Bloomberg and helping develop awareness with crypto. So we see him a lot on TV being interviewed. Him and Tom Lee are probably the most common people interviewing Bloomberg. And so he's very, very pumped. He's very, very excited. And he's more involved in trying to help institutional investors get involved in the crypto space. So he has this entity called Galaxy Digital. And now they've teamed up with Fidelity. So Fidelity is the world's fourth largest asset manager with $7.2 trillion in assets. And they set up a subsidiary called Fidelity Digital, which is taking on Galaxy Digital as a client. And what they're going to be doing is selling products to institutional investors. And they have 27 million customers who are involved in Fidelity and 23,000 businesses. So they want to offer them digital products going forward, which is a huge, huge, big deal because we've often been saying, okay, people have to stop being consumed with ETF or Bitcoin ETF as being the next reason why Bitcoin will take off. It's actually news like this where institutional investors have these other means, these more centralized means to get into crypto. And I think once things start to turn around, they're going to start, climbing up. Prices should start climbing up quite quickly now that, the big players or a lot more bigger whales than there are now in crypto are going to be getting involved in this space.
Honestly, I've got mixed feelings about it, and it's nothing more than my idealism shining through. But I mean, I've never been a Bitcoin maximalist or thought that Bitcoin's going to replace everything. But part of me has always loved the ideal of Bitcoin, the idea of moving power away from the big guys who have 27 million customers and trillions of dollars in assets under management. The idea of Bitcoin, we don't need this trusted third party. We can keep the ledger amongst ourselves, power to the people sort of thing. And even early on in our discussions on analysis and chains, I would say, this could go one of two ways. It can either, bring out some new big players, it can make the existing big players bigger, or it can result in something that's, more power, more spread, more in the hands of the little guy. And I think that likely this is a big signal that it is moving in the direction of the first one. Of maybe we'll have some newer players, but we're going to see more and more dominance from larger funds that have lots and lots of money to just dump into cryptocurrency.
Yeah, I understand the sentiment, but I feel like history's always shown, with grassroots incentives have always been about taking down the man and changing the system. Eventually, the man ends up in the game because they realize there's an opportunity there. Like, I don't mean to sound so cynical, but like, I, it's hard not to think a world where, billionaires, millionaires are standing on the sidelines while some form of asset is increasing in value, especially one that increases in value way quicker than anything that's out there in terms of stock markets or bonds. So
Mm.
I feel like it's just inevitable. Like, yes, last year when we set up the podcast, it felt like this little club, this little secret society, and it was a
Yeah.
lot of fun. And it was a lot of fun, but if it is to grow up, if it is to increase its penetration on the world's population, it has to become more sophisticated. And unfortunately, we'll lose that sort of I don't know, against the man sort of, feeling, its culture, and for the common person to believe it is worth buying crypto, they're going to need more than this.
Mm.
And I think things do polished, then they will get more involved.
Well, I think one thing that really comes down to, Neil, is that all of the incentive models that have been tried out with any crypto system have been purely based in financial rewards. Uh, Now, that's not the primary motivation of people, but it is the primary motivation of corporations. People, if they're offered incentives, they might do things because of the money, but they also might do things because it gives them a bigger purpose, or they know they're helping the world, or they're part of an elite club. There's all sorts of motivational models. I think I've mentioned this before on the show. I use the acronym CAMPS. So you have cash, autonomy, mastery, purpose, and status. And the thing is, as long as we're stuck on cash, if the cash or the tokens or the financial rewards are significant, then yeah, you're absolutely right. The big players are going to move in, and it will remain harder and harder to be decentralized or sort of a power to the people system, no matter how it started out. And this really comes down to the core motivations of classic capitalist structures. And not to say that it's bad, it served us well. However, when we're thinking of sort of models of the future, as long as we're stuck with pure financial incentives and the price of Bitcoin and price of assets, I don't see how any other way other than the big players are going to dominate, and maybe a couple of new ones will crop up in the meantime.
But I would say that probably the most interesting thing, and the most hopeful, aspect of crypto for me is how these systems are consensus based, and how if you are a player in a type of crypto, you're being paid in that crypto, for example. So just say there was a new company, and instead of being paid in fiat, you're being paid in crypto. So you can have that incentive to see your value increase. And I would that's where I'm hopeful. These new models are kind of like a world where the common person, if you're just like a new trainee marketer, joining a company, you're kind of sitting on the big boys table, because it's in your interest and the investor's interest, be it institutional or whatever, to see the value of this crypto increase. And so you're kind of like, you're both benefiting, say 10%, 20%, 30% together. Whereas in a world of startups today, if you join as a trainee, you're being paid in fiat, and maybe you're not getting any percentage of the company at all. And whereas the biggest percentages of that startup went to the founders. And you got some people that be maybe there 3 or 4 years, might get like 0.002% of the company. So in the end, their payday ends up being like $40,000, $50,000, which is so much percent, maybe like 5% over the 3-4 years they're there, but everyone else gets like 60% of their salary over 3 years, 100%, 200% bonus over compared to the salary over 3 years. So it ends up being, it's not equal in benefit, and therefore that's where I see crypto being different. Is that, as I said, it means that the small people in a new company have the same increase in wealth as anyone else in the company.
I guess it would depend on how the company is set up, right? And this is where it really is going to come down to people that care about these sort of systems, and people who are thoughtful about incentive models and economic models, to sit down and reimagine how this technology can really shift the world. And don't get me wrong, I'm still very hopeful. I'm still working in it, quite diligently, seeing, okay, well, how can we make it a more equitable society? How can we make it so that the little players aren't forced out? Because we've got some big problems as a society that blockchain may be instrumental in clearing out. And one of them is stopping the concentration of wealth. It's not that we need a completely equal society, it's that it needs to be more equal than it is. And I think that even the most hardcore capitalist is in agreement with that. It gets very unequal, and it ends up getting more unstable. And I think that that blockchain offers a lot of hope there, but we have to not approach it naively. I think that's my takeaway from this, and seeing the big hedge funds come in, is that we can't be naive when we're talking about blockchain and Bitcoin as, oh, well, we'll just create our own currencies and our own projects, and suddenly they're going to solve a lot of the potential problems. We got now a way for the unbanked to be banked, and a way for basic minimum income to be met, possibly, but it's got to be done with care. Otherwise, we're going to just see a couple of newcomers come up, make piles of money, and then new systems of wealth inequality be made.
I agree. At the end of the day, it's in their interest that their own country does not become the new Venezuela. So as you said, maintaining stable society is what they have to be mindful of, and I'm sure they are. And yeah, I'm hopeful. I understand why, going back to your early sentiments, how you're kind of cautious, but I'm hopeful that things will play out that will help the little guy more than it has been in the last 10 years.
As we sign off, Neil, I just wanted to mention I'm helping someone organize an event called the Blockchain Society. They've got events going on all around the world, but they've got the first one in Berlin coming up on the 25th in the morning, 25th of October. That's it. Have a great day.